Hi everyone, welcome to the Oxford Policy Podcast. My name is Marc Naro, and today with my colleague Cristian Iftodii, we are delighted to be at the EBRD headquarters, the European Bank for Reconstruction and Development, and to be joined by Madam President Odile Renaud-Basso. Madam President, thank you very much for being with us.
Thank you very much for having me. And welcome to EBRD.
Thank you.
Madam President, you had a very fulfilling career. You graduated from Sciences Po, you went through ENA, you worked at the European Commission, and you chaired the French Treasury. What key moments of this career do you think helped you the most in becoming the president of EBRD?
I think a lot of moments, different experience and so forth help me and now are very useful in the work I have to do. The first one is, I would say, a lot of international experience. As you mentioned, when I started my career in Treasury, and I had to deal with international issues. I started with working on sub-Saharan African countries, like in 1994, so a long time ago. And it was post a big devaluation of the currency, so huge economic shock. And we were working on what kind of support we need to provide to the countries in order to stabilize the situation. And then I moved on dealing with debt issues, and as a Secretary General of the Paris Club, and then later on I chaired the Paris Club, which was very, at that point of time, very interesting in debt renegotiation, sovereign debt treatment, with a lot of discussion on debt cancellation, debt sustainability, and so forth. But I also did other things in the course of my work in Treasury, dealing with financial regulation, financial institution, but also European issues. And then I moved on to Brussels. And having this European experience is also today very useful because, first of all, you learn a lot about negotiations and how you negotiate with colleagues and you try to build consensus to move things and get results. But also a lot of connection in the European Commission and so forth. And in what I've learned in my career, that you meet people in different phases, and then you very often see them again in different formats. So I worked also a lot on G7, IMF, World Bank issues, which is very useful for me now. So my take is that, have a sort of diversity of experience and do things in different environments, different institutional setting, and so forth is very useful because you build also a lot of knowledge. I also happen to, at some point of time, to work in Caisse des Dépôts, which is a sort of French public-owned, public institution, financial institution, working a lot on the investment with local authorities, social housing and so forth. And now, with like a bank, and now it helped me a lot in understanding how banks, how do you manage a bank, the risk, the return, the balance sheet, and so forth.
And very recent news for EBRD is the capital increase from 29 billion euros to 34 billion euros. It's only the third capital increase in EBRD's history. So I want to ask you, how did you secure this capital increase? What were the challenges? It's also showing a lot of confidence from shareholders and the expecting role EBRD will play in the reconstruction of Ukraine. So how do you think this role evolving in post-war reconstruction of Ukraine?
So first of all, about the capital increase, indeed, it was a long discussion with shareholders, and it started with a few months after the war in Ukraine started, and the discussion was triggered by the fact that we and our shareholders wanted us to invest in Ukraine in the war, to support the country during the war. But of course, it's risky, and for a bank, it's not something you do easily because you risk taking losses and then impairing your balance sheet. So we started with having some guarantees, so investing with guarantees of shareholders or donor countries, and then we realized that the leverage would be much bigger with capital increase. So it would be if you have capital, then we can deploy more funding. And so we build some agreement among shareholders that this would be the best way for us to be equipped to support Ukraine in the wartime, but also to have the capacity in the reconstruction to deploy enough capital. So that took a lot of discussion, and then there were an agreement reached in spring 2023. On principle, final decision was taken on December 2023, but then each shareholder has to ratify, has to put money in the budget in order to pay for the capital increase. And that was a big effort to convince everybody, that all shareholders, and we are very happy because we have a 95%, more than 95% support of shareholders from very large shareholders, all the G7 countries, all European countries, but also our countries of operation that subscribed. And I think it shows the support for the bank, the support for the strategy, the feeling from shareholders that the bank is useful with our specific mandate, which is supporting private sector and market transition in the countries in which we invest. And in Ukraine, this really helped us to invest very substantially. We increased our investment in Ukraine since the beginning of the war, which is not a typical situation for a bank. And we deployed more than 9.5 billion euros, so more than $10 billion in the country already. And we will continue to do that. We will continue with this level of investment in the war, and we'll be able to increase our investment in the context of reconstruction. And we see our role very much to support the private sector. More than 90% of the project we've been doing in Ukraine are with the private sector. In terms of volume, it's only 50% of the funding because it tends to be smaller project, but it's very important to keep the economy running, infrastructure functioning as much as possible, and business continuing to develop.
Okay. You mentioned that you chaired the Paris Club, and you worked the Paris Club worked on restructuring Ukraine's debt multiple times. So do you think the current war debt is sustainable, the trajectory of the debts, and how could the repayments be done realistically post-war?
So, the IMF, when the IMF have a program, they always look at the sustainability, and they made an assessment, and their assessment is that the debt is sustainable. But of course, it depends also very much on the scenarios, how long the war will last, what will be the economic rebound after reconstruction. Because, it's the economy has shrunk, Ukraine GDP has shrunk by 20% in the first year of the war, then slow increase, positive growth, but limited. So of course, with the debt to GDP, if the GDP shrink, it tends to increase, and there were a lot of borrowing. I think there are some steps that have been taken to ensure the sustainability. The fact that, for example, the EBRD and the 90 billion euros European loan is considered as not repayable unless there will be some reparation from Russia and so forth. So it's a sort of contingent loan that is not considered as debt increasing in the current situation. And also Paris Club creditors have committed to, they have rolled over and provide the suspension and committed to reconsider the debt treatment. What is worrying for us, and that's a challenge, I think, is also the situation of the state-owned enterprise, which is the level of indebtedness has increased, and the revenues are not, have not increased in parallel. So that implies, and there is quite a lot of work also on the state-owned enterprise debt restructuring. One element which is key for us is that as an MDB, Multilateral Development Bank, we have a preferred creditor status. And when we lend to the public sector government with a sovereign guarantee, we cannot, we have preferred access to repayment, like the IMF, like the World Bank and so forth, which is very, very key in our financial model, in order to, that's an underlying element for the AAA rating, which is very important for financial institutions like us.
And last question I want to ask you about Ukraine is the current report from Transparency International ranked Ukraine 104th out of 182 countries in corruption index. Is it a concern for EBRD despite the commitment from the government to tackle corruption? And how do you take measures to tackle this phenomenon in your investments in Ukraine, but also elsewhere?
Yes, for us it's a key focus to ensure that, because we manage public funds, and to ensure that our money and these loans are well used, and so we are very selective in the counterparties with which we work. We have integrity department who are doing due diligence and really looking at the history, the background, the reputation risk related to our clients. But we also work more on the structural transformation. So, for example, in Ukraine, we've been focusing a lot on state-owned enterprise, so our big clients' governance improvement. We've worked with the government and on the transforming the rules for governance in state-owned enterprise, so as to ensure that you have external board members, independent external board members, sometimes coming from foreign countries with a lot of experience in corporate governance, so independence also from the government in terms of decision making. We participate to the selection of the board members. With a number of clients, we've developed some plans on anti-corruption, on procurement, and so forth. So this is a big priority for us, corporate governance and transparency, rule of law in Ukraine. And we link that with our investment, but we also do a lot of policy work. So preparing regulation, ensuring that this is well implemented, participating to board appointment and so forth. And when we see things that, that we don't like, for example, when at some point there has been some unwarranted change in the management team of big state-owned companies, and we were not happy because we thought it was an interference from the government and at that point of time the Minister of Energy in the management of a company where we were very active in lending, and we decided to suspend and to really get back on track in terms of the quality of the governance and so forth. So we are quite demanding, and we are very careful about that. We also work a lot with civil society, and we develop, for example, try to work on improvement of transparency on procurement with Prozoro system, which is a system in Ukraine which is really putting on in public and very open and transparent all the procurement offers and who has been selected and so forth. So the role of civil society in Ukraine in that area is very important, and we've seen that. You may remember last summer there were some attempt to change some key regulation in terms of the role of anti-corruption bodies and so forth, and there were a strong backtrack from external donors, the EU and so forth, but also civil society, and the government went back on track fully with ensuring the independence of this anti-corruption body, which are very important.
Madam President, EBRD was founded in early 1990s as a bank to help reconstruct Eastern Europe after the fall of the Soviet Union. However, we can see that EBRD has extended in Middle East, North Africa, and more recently in Sub-Saharan Africa. Do you think that the bank might expand even further in, let's say, 20 years, maybe in Latin America or other parts of the planet? And if yes, what will be the difference between EBRD and other multilateral development banks like World Bank or others?
So I don't think that we will have ever, I don't think the aim is to have a global footprint. We have expanded indeed from our core historic mandate, post-Soviet, post-communist countries, to Turkey and South Mediterranean, Middle East, and now the new phase is indeed some sub-Saharan African countries. The logic I see in all this expansion is this is a sort of, I would say, the broad European neighborhood. So countries which are closely connected to Europe, which development is very strategic for European stability, European development, and so forth. When you think, for example, and I think it's sub-Saharan African countries, the interconnection, the impact on political stability, economic stability, migration, and so forth is very important. So, of course, you can never say, no, 20 years is far away, but I think that, for the scope, the geographical scope now is well defined. We will review the situation with sub-Saharan African countries because we decided to start with limited expansion to 6 countries. For the time being, it's 5, maybe 6 coming, but then we will see what is the outcome, assess our impact, our role to develop a new project, new pipelines, and to expand what we've seen, what we've shown when we started investing in Mediterranean countries, is that with our investment, we did not crowd out other multilateral development bank or bilateral development financial institution, but we, on the contrary, we increased, and everybody increased the level of investment. And I think that because of our model, where we focus very much on private sector and policy work to facilitate private sector investment, we probably help to create a pipeline of projects. And one very good example, for example, is the work we do on renewable energy, where we work with government in terms of policy to define what is the right framework of the legislative, regulatory level to attract investors in and developers in renewable. So the price setting auction, all this kind of framework. And we've worked with, I don't know, 18 governments to develop that. And then we can finance some project, but then everybody can finance some project. It really creates a new type of investment, which is beneficial for the countries and gives, a lot of opportunities for investors.
And you mentioned other multilateral development banks. Recently, we saw the emergence of development banks such as the AIIB or the New Development Bank. There is also existing development banks that are expanding, like regional lenders such as the EIB, the Council of Europe Development Bank, or the Asian Development Bank. How do you distinguish from this other multilateral development bank? So you mentioned private investment. Is it a comparative advantage from EBRD?
Yes, it's a very specific feature because we have this objective to have 75% of our investment into private sector, which is unique. For example, AIB, they do some private sector, but mostly public sector, or Asian Development Bank historically also was doing mostly public sector. Council of Europe Development Bank is doing only sovereign lending. So this makes, it's quite unique, but it's also what is quite unique if we compare, for example, with IFC, which is the World Bank private sector arm, is that we bring together, because we can still do a lot, we can do a bit of public sector, and very often it's state-owned enterprise or sub-sovereign local municipalities or local regions, and policy work. So we talk to government and work with the private sector, and very often our action has really in the policy work to support the private sector development and to take measures that will facilitate public-private partnership, that will improve the business environment for private sector and so forth. So this gives us a specific level, approach. I think is quite a unique model, mix of tools and approaches that is quite unique. And then we are cooperating a lot with the others. I think that we see the MDBs, the Multilateral Development Bank, as a system. So it's like we are not competing against each other. Of course, sometimes there is a bit of competition, but also competition is not bad for, if you have competition, you do your best also. It's a way to stimulate. But we also very much cooperate. Do some co-financing on project, have mutual alliance approach where when we do some project together, one institution is in the lead and do all the due diligence and so forth, and the other follows. We have a lot of joint work on thematic issues like how you mobilize more private sector investment, how you develop green transition. So a lot of cooperation, which is very useful.
Madam President, US is the largest shareholder of EBRD, and we have seen that the current US administration is drifting away from multilateralism and is decreasing foreign aid. Moreover, the current US administration has imposed tariffs on countries that EBRD works with. How do you keep the relationship good with the US, and how do you keep them stable on the values and strategies of the EBRD?
So we are very much engaged because indeed the US are the largest shareholder, and they subscribed our capital increase, which was a very good news in terms of support and engagement with the EBRD mandate. I think there are a lot of features. I mean, it's that the private sector focus, the idea to develop market economies, the priorities, for example, we have on improving governance in the public sector and in the private sector and so forth. All this is very much, I think, in line with how they see and, the role of development and how we can help countries to really stabilize, develop for the benefit of the people. Of course, they are not we have a diversity of shareholders, so sometimes shareholders do not agree on everything. But we have mechanism as a multilateral institution where we have voting principles, voting rules, and decision making that are efficient and allows us to invest in project. So it's a dynamic relationship, and I think we try to do and to bring as much support on what we do and our strategies as we can. So it's everybody. It's not like we have 100% agreement on everything, but we try to have a lot of the larger possible support, and to listen to all shareholders, to try to find and to address, to work with them in a constructive manner. We also work with. We have a lot of partnership with US businesses, US DFC, for example, working with them on projects and so forth. So a lot of ways to cooperate.
Thank you. As a final, you recently, your second term was renewed and it will end in 2028. So I want to ask you, what do you think your legacy here at the bank will be? And what moment during your presidency of the bank you are most proud of?
So it's early to talk about legacy because I have the impression I still have, but I think that for me, my hope is that in 2028 we will be in full speed of reconstruction of Ukraine and the war will be over. And because we've seen the resilience of the country, but of course it's a very challenging environment. So I hope that we will be able to, we'll have started to deploy really reconstruction, new investment, new foreign direct investment and so forth. I also, one of the big new step under my since I'm here is the start of investment in Sub-Saharan Africa and in Iraq. And I hope that then in 2028 we'll have we've shown and really shown how we contributed to development of these countries, investment in the private sector, energy transition, energy security, and so forth. And I also hope when I see the current tension with the conflict in the Middle East and so forth, and the destabilizing effect it has on some countries we are investing in, like Lebanon, but also I was mentioning Iraq. We are just starting, and this is a big shock for Iraq and Jordan and so forth. So I hope also that the situation will be stabilized there. And that we will start investing. We will be investing and for the long term in these countries to help developing new infrastructure, new energy capabilities, a more vibrant private sector and so forth. And the last point is also, last but not least, is internal transformation of the bank. The world is changing a lot around us, new technologies, AI, new geographies, a lot of volatility. So an institution like us needs to remain, like EBRD, needs to remain very agile, to address, to embrace new technologies, improve our process, be quick in the way we deal with clients, and provide support to the countries in which we invest.
Thank you very much, Madam President Odile Renaud-Basso. It was a real pleasure to talk to you and a privilege to be hosted here at the EBRD. So thank you very much for your time, and we hope everyone really enjoyed, and we invite everyone to listen to the next Oxford Policy Pod episodes.
Thank you.
Thank you.
Thank you.
you so much for watching this episode of Oxford Policy School.
Subscribe to our channel and many more episodes to come.